All right, all right. Welcome back, everybody. Appreciate y'all joining again on a Tuesday night, trying to get this work in, right? This ability to better ourselves as traders, right? When we are going to look at any type of these concepts, as far as institutional concepts, breakout strategy, whatever it is, right? Whatever you're trading, you're here today trying to learn, trying to get better, right? And I applaud you for that. So when we get started in this little session that we're going to do today. I'm just going to start off with ETH and Bitcoin, just talk about a little bit of direction analysis for everybody who is looking for that, looking for an immediate type of answer, right? Maybe they're in place, whatever they're doing, right? So we're going to start off with ETH before I get into the actual nitty gritty of our session here. So let me go ahead and get rid of all of this, tell you why I had this up, and then we can get this started. So as we're seeing ETH, right, understanding the daily structure, we know that we broke out of our range, right? We had an impulsive move to the upside, came back up into premium of this high that caused a low right here. So we have a supply zone in here that we can see that price is reacting off of, right? It's starting to grab that supply. We can see the wicks to the upside starts to move downside. But what are we noticing with this supply as it is coming? I'm just looking at the wicks and the candles right now, right? What are we noticing? Well, if we can look at this, right, all of these candles that are coming to the downside, remember this is a daily chart. So you have 1, 2, 3, 4, 5, 6, 7 days of price action, of supply, right? Of shorters, shorting this to the downside. 7 days of price action taken in one day, one candle. What does that tell you already? That tells me that demand is more in control than supply, right? We can see that in these areas, if we wanted to short, we would want to see a similar reaction to this, as well as this type of action, right, on the upside coming up to this area of supply for then price to then drop down, right, and continue that downtrend after possibly breaking structure and then continuing to then the downside. So when we are looking at what is just in control based off of the literal candlesticks, this is how some people are able to notice, or I could go on a 5-minute chart, look at this and say, okay, supply's in control, right? This is pretty obvious because we have displacement candles coming to the downside, breaking structure versus our up moves. Look at our up moves, very lethargic. What does that tell me? That we're just creating liquidity, right? We're creating liquidity to the downside here. How many people are getting in longs on this to the upside, right? How many people look at this and see a breakout, right? And they're in longs right here, stops underneath this low, right? What happens? Immediately taken out, right? Because this is the most protected low within this swing that they believe will hold, right? That's the lowest low. They're like, no way, price can come down here if it's made all this price action and it's broken out, right? It's just going to continue to the upside at this point. So then you have all of retail, right? Getting into long positions, right here, here, and here, right? With their stops underneath these lows the entire time. So what happens? We take out those lows, and now we have taken out those lows, right? We see a reaction from that. That's where these liquidity raids and these quote unquote scam wicks fall into place, right? That's where liquidity is present. So going into ETH, right, understanding our daily structure, like I was saying, it looks like more demand is in control within this range. To draw my range from here to here, right, I had a most recent range from here to here that you guys were looking at that I was posting. But to draw my entire range from this, I would take it from this low, this external low here, to this external high. Why? Just go ahead and get rid of this. And why would I do this? Well, because, get out of drawing mode. We can see, right, after price made this move to the downside, remember this is a daily chart, so we're just looking at the body candle. So even if I were to just go to our settings real quick, if it wants to bring me down there, here we go, and take off the wicks, right? I look at this and I can see the structure. I see we look like we broke structure to the downside. Obviously, this was still bullish structure from this low that caused this high, right? Price came down, just filled the fair value gap, probably tapped demand on lower time frames, right? Rated liquidity, and then created new demand. So within this range, right, is where we rated liquidity, left imbalance, and broke a new high, right? So this is where demand was introduced after that liquidity raid. So I would draw it from this range. Now, remember, this is still a daily chart, so this is a higher time frame range within our most recent price actions. Let me go ahead and throw back on the wicks for you guys. And then we'll understand the range that I was looking at. Why was I looking at this range right here? Well, because this low caused this new high, right? This is the daily chart. So if I'm trying to draw my range for my most recent price action, right, where I'm going to look to take a trade, I'm looking from this low to this high. So let's go ahead and take this away, get rid of this, understand the price action within here. Let's go back to the 4 hour, right? We were on the daily. Let's look on the 4 hour now for our top down analysis, understand what we're doing, right, within this range. Go ahead and draw this out to here. And look at this price action here, right? So we have a large impulsive move to the upside. We can see price rated liquidity, rated the lows, and then broke structure to the upside from highs that caused new lows. So demand was introduced within this area, right? We can see a large imbalance after price broke structure to the upside, continued to the upside, and then what do we see here? That buy side liquidity, right? Quote unquote inducement, right? As price is coming down. This is getting people in shorts, right? They're getting into short trades, believing that this range is going to break to the downside. Maybe they have this drawn out, right? Maybe they have something like this drawn out, whatever it is, right? Whatever pattern they have drawn out, they are putting their stops underneath these lows right here. And as buy side, shorting, right? As the shorting speculation, their side, they are putting their stops over these highs. Why? It's the highest high. That's the most external high if they're shorting. So if this is a 4 hour chart or a daily chart, they're looking at this like there's no way it can reach this high. So if they're in a short here, they have their stops over this high, right? If price is starting to come back up, they have their stops over this high, moving their stops, right? Believing that they can will it into their way. But why would price move just because you put some lines on a chart, right? Being completely and most realistic, why would price move because you put some lines on a chart? It's not going to respect your lines, right? It's not going to respect your zones. We need to do the analysis to understand what zones and what areas will then be respected if we can study the price action in the candlesticks, right? We're not just looking for entries. We're looking for the entire narrative, the entire story. So for understanding what ETH did, right? And this is why I like to go back and backtest a little before I get into any types of trades, right? I like to look back a day or two, look back a week or two, and start to understand the behavior of the price action and where price could possibly go to next, right? So we had this buy side liquidity that we were talking about, the rate of the lows. So this took out all the early longs who longed this. They thought it was a breakout, right? They longed this to the upside, whatever it was. They're in trades right here, putting their stops underneath these lows, right? In trades up here, trying to take it out to the upside, breakout traders, right? And then what do we see? That liquidation rate of those longs. So now that the longs are taken out of the trades, there's two things that this price action right here does. One, it opens up the sell limits because we have a level right here, right? And then we have open liquidity available within the market for those trying to breakout trade, take a sell to the downside, right? Once it breaks this low, they're like, I'm in this short right here, and I'm going to take it to the downside. Same scenario if they put their stops all the way up at these highs, right? We can see the liquidity that is being formed. That is the entire point. Now, we raid those lows, open up all the liquidity within the market, and then we immediately break structure to the upside. Now, this introduces demand within this area now that we have rated liquidity and broke structure to the upside. We now have more demand within this area. Now we have a high that caused a new low. And then where's our impulsive move, right? That breaks structure and kind of shows us that same imbalance behavior on this side, right? We have one right here. And this is what I was looking at. And this is what I was most interested in, right? The reasoning for this is because I found this little imbalance, right? After that break of structure to the upside, if we go on the daily chart, right? My larger zone that I had drawn was this daily zone. And then we have that 4 hour imbalance within, right? As well as this large impulsive candle to the upside. So if we're looking for that candle before that candle, right? We're looking at this situation right here. So it is checking every single box, right? As far as demand zone, impulsive move, imbalance, right? And a rate of liquidity. If we can come tap into this demand, raid liquidity on the hourly time frame or the 15-minute time frame, make a double break of structure on the 15-minute time frame or a break of structure on the hourly time frame, then we can look for some possible trades to the upside to continue our bullish trend, right? We're going to be trading right to the upside within this scenario until we are proven wrong. And how is this good, right? So just the theoretical understanding of this, if we are in a long, right, or we are in a bullish trend and we are continuing to take longs to the upside, right? And we're just longing every single demand zone that is in place, right? We have a demand zone here, it's in place, demand zone here. We're longing every single one that is coming up, right? Let's say we get to this point, price starts to consolidate, comes back down, we long this demand zone right here, and then it comes up, and then it takes us out of our trade, right? What happens at this point? Well, if we are still using our bias until we are proving wrong, long, right, all the way up, until we are proven wrong, break of structure happens, I now have an area of supply, right? And I now have an area to look for to take this trade now to the downside, now that my bias has been proven wrong, right? And this is how it can be this is how we can get into that understanding of where price will possibly head to next and get into that mindset to where I don't care where price is at. And what do I mean by this, right? Well, let's say I'm in a long. I don't care if I'm in a long here or here. Why? Because I understand the amount of profitability that I can make from our lower time frame analysis, right? Our top-down analysis from higher time frames to lower time frames. I can catch a 10-to-1 trade within this price action, or I can catch a 10-to-1 trade within this price action. It does not matter to me where it is on the chart. I don't want to catch a top. I don't want to catch a bottom, right? That's not the point of these high R&R setups. The point of these high R&R setups, right, is for the ability to make the most amount of profitability within the least amount of time, right? That instant green satisfaction that we are looking for as traders. Because now I have the ability to wait for a single trade for a week. And then after I'm done waiting for that trade and that trade hits, right? I'm done. 50-to-1. I'm out. I could take the month off if I wanted to, right? From the amount of profitability I just made from one trade, just by waiting patiently for a few days. Yes, I didn't make some trades. Yes, this dude's over here killing it every single day, but I could have made 10, 20 times that, right? Just by waiting, just by utilizing that patience. So this is where I can get into these situations, right? To where we can wait for everything to come into place, and then we can go right directly to the 1 minute after we do our weekly, to then 4 hour, right? 1 hour, 15 minute, 5 minute, 1 minute, 15 second, and then even lower if you are willing, right? We can get to that point to where we can risk a lot less pips, right? And be able to risk more margin, but still risk, right? That 0.5 to 1% that we are looking to risk every single time. So that's what I'm looking for ETH, right? We're still showing that bullish structure. So it's a little lesson with the analysis as well. We can see we rated liquidity here. We're starting to show some type of bounce off this zone. No breaks of structures yet, right? Nothing I'm super interested in. We still need that final push from a high that caused a low, and then we need to see that imbalance, right? That break of structure to the upside after liquidity raid, so we could still possibly come lower, fill these areas that cause this new high, and then we can look to possibly take a trade. Now, it's literally probably going to be the same exact story for Bitcoin. That's very similar, actually. So we have this 4 hour, if I'm looking at my most recent range right here, again with ETH, our big range, right, our daily range. So if I were to show you the daily, it's going to be from this low to this high, that same liquidity rate to the upside. So if we were in a situation to where we saw a possible distribution to then a accumulation, right, after mitigating these areas, then we can look for an overall reaccumulation from our distribution to then accumulation, break of structure upside, demand zone, right? And then I'm in longs targeting that higher time frame buy side liquidity, as well as our supply zones, right? Higher into the range as far as Bitcoin goes. Very, very similar story, right? If I were to give you a price, which I will do real quick, 4 hour break of structure to the upside here, price continued up. Now this high caused this new low internally, so this is all internal structure unless this high can get broken here or this low can get broken here from this low to this high. So the internal structure I'm talking about is this range. Everything is internal within here. We are starting to create a lot of buy side liquidity as well as sell side liquidity, right, at the top of our range. What does this tell me when we are looking at ranges? Remember our premium and discount understanding of ranges and how we can start to believe where price will possibly head next. Well, we have imbalances, right? Areas that cause this new high out of the range. We have areas of demand, right, that we can look for price to possibly travel back into after rating liquidity. Now, where are we looking for price to make this move, right? We want price to make this move in discount. Why do we want to make it in discount? Well, because of the algorithms, right? They will buy in discount and they will sell in premium every single time. As a whale, right? As a hedge fund, as that big composite operator out there, right? I want the cheapest price possible if I'm going to take a long, and I want the most expensive price possible if I'm going to take a short, because then I can make the most money off of that. And if I'm able to move the market, that's exactly what I'm going to do, right? That's why we see the market trace extremes so often, right? Because now that gives you the ability, or gives retail the confusing understatement, right? That why did price go all the way down here, then immediately retrace that in a day? Like, what's happening, right? They get in this rat race type of mindset to where they don't know what is going on. So for Bitcoin, right, similar stories as ETH that we were talking about, but with the ranges, if we are accumulating, or sorry, consolidating, right, within premium of our range, I am more sell prone. Doesn't mean I'm going to sell, right? I am just more sell prone. This could be for an internal pullback, right, to areas of demand that caused this new high out of the range, or this could be, right, a liquidity raid or demand mitigation of this candle right here and continuation higher. The only way to confirm that will be with our structure, right? But I would like price to come down, mitigate these areas of fair value gaps as well as demand down here at 21.5. If it does not, it does not, right? And we just hold this structure, break structure on the hourly, or the 4 hour. I would actually want to see the 4 hour for this trend right here. Something super impulsive, right? This behavior that we are looking for over here, same exact story. So now we're going to go ahead and get into GJ real quick. We'll talk about a 54-to-1 trade that ended up being closed for a 1-to-50. Talk about how it was found, why it was found, and the analysis before that. So obviously this is our higher time frame chart. This ended up being an intraday trade. Let me go ahead and show you exactly where that was found. Now let's go back. Let's look at something real quick. So I'm gonna go ahead and clean this up for you guys real quick. Everything but the short. So let's just go ahead and hide this, and then let's hide this as well. Let's delete that. And then let's go to our daily. You guys heard it was a 50-to-1, right? Can you even see that trade within this price action? You cannot. You cannot see that trade within this price action. So I by utilizing lower time frames, right, in that lower time frame structure within a range, I am able to catch a 50-to-1 with the smallest moves, right? I don't have to catch this move right here. That's why I was saying it doesn't matter if I catch a top or a bottom, right? Based off of our analysis, based off of our steps proceeding in each trade, then we can look to take a trade. Now, to get into this GJ trade, understand why it was taken, where it was taken, and how it was taken. On our higher time frames, right, we can see obviously that we're putting in a bullish swing structure. So sorry, you guys, I will go ahead and delete all of this so it can be a little bit cleaner. Right, but we have a bullish swing structure that is put in from this low that caused a new high, right? We started to create a range within that. We can see liquidity that is available within this range as well from these equal lows that were created. And then we see the raids as well. Now that we come back down and mitigated that demand from that low that caused that high, right? We see a liquidity raid to the upside, break of structure to the upside, and then we see the start of a range. Now this was a counter trend trade. It was a counter trend trade, right? You can't even see where the trade was, and it ended up hitting for a 50-to-1. All we have to do is look for our steps over and over. It doesn't matter where price is at or what price is doing. We are looking for our steps of action, and we are doing that over and over because this now brings consistency as well as boringness. I'm not going to sit here, right, and shout myself out all the time for hitting a 50-to-1, right? That should be expected based off of all the work that I have done up into that point, right? This is exactly what I mean, right? And that's how we can also remain humble, because now I'm not becoming married to any pair or any chart based off of the way it's moving. I am only worried about my steps, and if my steps are not hit, then I have no trade. Now let's go back. Let's go now to our lower time frames, right? So we had this break of structure to the upside, and then price mitigated this fair value gap from this break of structure to the downside internally, which just ended up being a liquidity raid, right, after this break of structure upside. So if we look on the 4 hour, we can see price came up, mitigated that fair value gap, came back down, right, and we see what looked like a liquidity raid right here. Now I was at this point in time where I believed, right, that price was going to put in a possible UTAD up thrust after distribution that had occurred right here, and then seek these lows, right? This is what I had believed. I was taking a trade here, looking for these lows here. But let me tell you where the feasible take profit came from, and then how we could have done this, right? How we can start to get into swing positions and then take profits at feasible points, as well as not hold for too long or not take profits at all, right? Some of us get too greedy and end up not taking profits. So let's go ahead and look at this trade now. So this was the 4 hour. Let's go to the hourly time frame. Let's look at where this trade was taken. All right, so this is that trade. It's available now. We can see it hit that 50 to 1, ran down to a 54 to 1. Obviously, profits were taken before then, so it wasn't a whole 50 to 1, right? We have to do the actual math on where profits were taken and do the averages out for the R&Rs as far as that goes. But let's understand our price action here. So we had this rate of these lows here. Price broke structure to the upside and started coming up into the supply zone from this high that caused this internal low, right? Now I look at that and I say, well, this looks like possible, right? Long inducement of this move right here. We look like we're creating liquidity, as well as we have demand down here that is unmitigated from this low that caused this high after the first liquidity rate, right? That's what I was looking at, and I was believing that price could possibly come down to these areas as well as these areas overall to seek that low, right? Now, let's go the analysis was done on the hourly time frame, and then everything else was below the hourly time frame, right? So after we understood our 4-hour trend, and then we are looking at our 4-hour trend, I'm gonna go ahead and mute my fault, brother. It's just a little loud. Had to mute you there. But we're looking at our 4-hour trend right here. We can see these lows that were caused, right? And then price came back up and started to break structure. This is where I was very interested in this trade because we saw a low right here that caused a high, and then we saw that immediate break of structure to the downside right here with displacement and left imbalance, right? Everything is coming into play. Here's our displacement, here's our imbalance, here's that break of structure downside, right? And now I can look for my possible trade. I confirmed this with 15-minute structure coming into this range from an hourly to a 15-minute, right? We had our 4-hour, hourly, and then 15-minute that I'm looking at. So now let's go to the 15. Look at where this was taken. So we can see now on the 15-minute time frame where the hourly break of structure was shown, and then let's look at the 15 now. So we see that price broke structure to the downside on the 15-minute, left a displacement candle. What's the rules? Where's the candle before that candle that broke structure? Present right here. 15-minute time frame. This is my 15-minute zone I have drawn. Now let's go ahead and do some refinement of this zone to understand where it is going to go next. Now from the 15 to the 5. Right, if we do that analysis from these lows that caused this high, right, we see that break of structure, that area of supply that we had here. We can do some refinement to this candle before the candle that broke structure to the downside of these lows right here, and we now have something looking like this. But this isn't very important to me as well, so let's understand what this means. Now that we have our 15-minute, our hourly break of structure, 15-minute break of structure to the downside when we took out this range low right, or this range low right here, we are looking for price to come back into supply, right, and then looking to confirm that with our break of structure criteria. Now, price comes up into this area, right? We see that first mitigation of the supply zone. We see it mitigate it, and then what does it do immediately after? It shows a bearish engulfing, or doesn't engulf, but it shows a large bearish candle, right? And then creates lows. This is where I get very, very, very interested in trades, because now I'm seeing that price is coming into these areas, right? And then creating a lot of sell side liquidity. Sorry, let me draw it to this low. Creating a lot of sell side liquidity within these areas. So now that it does broke structure to the downside, mitigated supply that caused that break of structure to the downside, and it is now also giving me reasons to come to the downside, I now can look to take this trade. So now that I'm at this area, I see that this low, this low caused this high out of the range, and then I see that break of structure to the downside that is present right here. What's our rules again? Remember, candle before candle that broke that structure point to the downside, as well as a very, very clean institutional candle that is present here on the 5-minute. Multiple confluences now coming together, right? So let's go ahead and bring this down to the 3-minute and understand the price action within here. So I ended up taking this trade off the seconds. I hope we can get to the seconds of this Let me go ahead and try replay real quick and see if we can get to seconds within this area. If not, it's okay. Let's try the 5 because that's where it was taken on. Perfect. Okay, perfect. All right, so we were coming up into this area of supply from this high that caused this low, right? We had the reason to now come down to these areas. We can see these lows. So any long trader trying to get into this trade, right, take this trade to the upside, ends up getting stopped out because they believe price is going to continue. Breakout, retest, they're in their trades right here, right? But we understand that structure is starting to shift. We are seeing our proven confirmations, right, of that supply zone that is being formed. So let's go ahead and take these out now. No, we know that they're in longs, right? And then let's look for now where this trade was taken, why this trade was taken. So let's go back to the 5 minute real quick, play this up. Or no, it's only 1 minute. Play this up. Once this was mitigated within this area and filled within this area, this 1 minute candle right here, this is when I was very, very interested on my in my trade. I was looking for Wyckoff within this zone, right? Some type of distribution, as well as that displacement downside. And then I was looking for an imbalance or that candle before candle to take this trade to the downside. So let's go into 5 seconds and look at the price action as it is coming up into this area. So this analysis was probably done for a day. It took me probably a day and a half to wait for this trade to come into play. And then once it was done, right, I'm good for the week. That's all you need. Now, let's understand what price is doing. We start to create a lows. We're coming high into our area of supply. This is where I get very, very interested, right? Because if we can understand what price action is doing here, right, we can see this is very, very, very unhealthy. This is a very unhealthy move to the upside. Let's go to the 1 minute. Very unhealthy move to the upside, right? We're not mitigating any demand. All we're doing is just liquidating and creating more sell side liquidity, more reason to come down as we are coming up into areas that caused a new low. So let's go ahead and look on the 5 second now. Let's see what happens right here. So price comes up into the area, and this is where I was in my trade, right? Let's go to the 15, I believe, actually. Let's drop this down. Here we go. All right, this area, right, of liquidity that was formed actually was right here that I ended up getting into the trade. 63,437 is my entry. This is in the Forex chat for those who are not believing or whatever. It really doesn't matter to me. I'm just trying to show you the behavior, right, what's happening within this area. So once we came into this 1 minute candle, I needed that break of structure, right? That double break of structure or an area of imbalance to look to take my trade after this came into play. So once we came into this area, manipulated these highs, let's see if we can get the one. Perfect. Perfect. All right, don't get discouraged or any type of confused when we're looking at this. And you might say, well, that doesn't make any sense. Just walk with me here, right? We'll understand what price is doing. So let's just look at our market structure. Price is creating higher highs, higher lows, and then we come up into this area, reaccumulate. We can see all this price action within here, and then cause this new high. And then what happens? We get that displacement to the downside that broke structure with two lows. We broke a structure point here, we broke a structure point here. Came back up, created a higher high, and then we made a lower low. And this is where I was most interested in the trade from the fair value gap and area of supply that was presented within here. Ended up entering the trade here, targeting now. Let's get rid of this. Take out the drawing tool real quick. Targeting now a higher time frame area of liquidity from this range that was presented right here. I'm targeting now this liquidity, and then after that, the imbalances, right, that were present within here. So if I go on my 15-minute time frame, we can see we broke a structure point right here. There are candles available within. Let's go on the 5-minute. Look within here too, and this is where I ended up taking profits. Why did I take profits at this area? Well, we had a large imbalance that was created, right? I understood if we took lows, then we could have, right, possibly rated liquidity and then continued to the upside from this low here that caused, this low here that caused this internal high. So this isn't a complete, right, 4 hour to 1 hour to 1 minute trade. This is literally a 1 hour to 5 second trade that was taken. And we are still able to get that large amount of profitability, right, targeting those higher time frame lows from that break of structure to the downside. All right, break of structure, confirmation, Wyckoff, break of structure, displacement candle, candle before this candle, right? We can see it's all showing us the same exact confirmation within these zones, right? We break 15-minute structure to the downside here after coming up and rating highs and mitigating old supply, right? It is giving us everything we need to be able to get into these trades now. So let's go back on the lower time frames and look at the reaction, right, off of that zone and why I was very interested, right? So we saw price come up into that area. My stops were over this high at this point of time. I believe there were 1.8 pip stops. But this ended up happening, right? Ended up entering the trade. Now, where am I going to take profits first and or set my profit or stops to break even, right? Once these range lows are taken, I'm setting my stops to break even. Why? Because now that we have created a new low and we have showed algorithmic introduction, right? I am not looking for price to come back up to these areas. If it comes back up to these areas and I am wrong and I am stopped at a break even, completely fine, right? We have to understand that we are on a 5-second chart, right? It can come down to a 5-second structure point and still continue to the upside if we don't have our higher time frames within alignment. So we want to see that lower low, lower high creation, and continuation to then the downside. So let's go ahead and play this out. What do we see? That lower low, lower high, stops break even, completely risk free, and roughly 2 minutes, my stops are break even. I can walk away from my chart. I'm done. I'm done. All my analysis and everything has done up to that point. In 2 minutes, I can walk away and I am completely done with my trade. Set my stops to break even, I can walk away from the chart. What's the point of watching? Now I can hold for take profits. Take profit 1 here at these lows. Why? Because this low caused an internal high, so we could still mitigate demand, right, from this range right here. And then our second take profit, looking at the lows here. And then the third, the 50% of that higher time frame fair value gap that we had over here. In place, right, within this area, just to take the last. And why did I end up taking it at this area? Does you might be looking at this and saying, well, it doesn't make a lot of sense. This take profit was actually taken based off of structure. Okay, so this was a swing, and I wanted to hold down to these lows, right? But I said, or said to myself, right, if we raid these lows and don't show a displacement break of structure candle to the downside, right, just says price wants to continue to the downside, then I'm going to be looking to take profits, right? So then because price could be putting in a liquidity raid and continuing to the upside. And that's exactly what happened within this instance right here. So we're in our trade, right? We want to see that instant green, stops break even after 2 minutes. We start to fall, right, down to our areas. At this point, you are break even, right? But let's just put our stops back real quick just to show the R&R. It stops over this high right here. Let's go ahead and look on the lower time frames. Yep, present right here. Let's go ahead and take a look at our R&R, right? At our first take profit, right? You're looking at a rough 23 to 1 within our first take profit. I'm more than happy with a 23 to 1. I will take more than 50%, maybe even 75 to 90% at a 23 to 1 if that is received, right? We have our first take profit that is hit. We have our second looking for those higher time frame lows. Right, and then we look for the final continuation after that, and then I look to take my profit after the 5 minutes showed a liquidity raid and break of structure to the upside. Now let me go ahead and show you what this means right here. So now we are watching price action play out. It comes down, and this is where many might get discouraged, right? This is where many might get shaken out of their trades or shaken out of their instances because they're like, well, it made this leg down, took my take profits, and it could continue higher. Well, why would I hold this? Well, we got our first take profit that was taken, right? 23 to 1. So I'm more than happy with this position right now. Second, I understand that a new low was formed. So we need to pull back, right, to the area that sponsored that new low so then we can continue to the downside. Where did that happen? Right here. Price came back up, right, to the candle before that candle that broke structure to the downside right here. We can see this displacement, right, from this low that caused this high. Displacement candle is formed, comes up into the area, rates highs, and then continues to the downside. So all it did was put in a lower low and a lower high, confirming our trend even more, right? So now we have our lows that are happening. We're looking for the continuation. The lows are taken, and this is where I got very interested, right? This is where I ended up taking profits due to this move right here. So if we look on the 2-minute and even the 5-minute, we can see that price came into these areas, started to show some type of bullish structure when we rated lows, left highs, and then broke to the upside, right? This is when I'm out of the trade at this point. Completely fine, right? Completely done. This was done from a 1 hour to a 1 minute, right? Or sorry, 4 hour to 1 hour to 5 second, right? Within this scenario, 4 hour, 1 hour, 15-minute, 5-minute, 1 minute, 15, and then 5, and then 1, right? But obviously didn't take it on the one, but I was showing you guys that market structure on how it is fractal and how we are looking for the same behavior at every single point of interest, right? For our confirmations up until that point, even if it's a 1-second chart and it looks super, super spotty, right? And we don't understand what price is doing, we can still see that structure and theoretically look at what's going to happen within those areas based off of simple market structure, based off of taking that noise away, right? So then we're not shaken out of any trades because we understand our objectives as to where trades are going to land, right? And understand our entire higher time frame narrative as far as where liquidity is going to be seeked and where we can look to hold and or set stops to break even. So that's what we're this was kind of that whole GJ breakdown that I wanted to show you guys, right? As far as how we can catch these on every single time frame within an intraday range, right? I don't need this move right here. I don't need this move right here. I just needed this little 2 hour, 3-4 hour, this 1 4 hour candle, right? And I'm done. That's it. That's it. 50 to 1. Done right there. That's literally it. And that's the beauty, right, of this style of analysis and why I will wait and why I will remain patient, because I only need 1 or 2 a week. And then I can go do what I want for the week, right? And that's what we also want as traders. And trust me, I guarantee not any of you want to sit there and stare at your position and stare at the chart all day. That's very, very, very exhausting, right? Very energy draining. And I know you guys, and I say this because I did it myself, right? And I got to that point to where I was like, why am I doing this? I ended up getting break even out of trades, right? That I'm sitting there watching for 8 hours. What's the point of that? I just wasted my entire day, right? Trying to will something into existence when it's simply not there. All we have to do is wait for our rules. And then once our rules are hit, we are good to go and we are out of the trade. So now that was GBP JPY. I believe somebody asked me about BNB too. I'm going to go ahead and take a look at that in a second. And we can get that done. Got about 15, 18 or so, and then we will end this. But we are looking at now a BNB. Thank you very much, Jupiter. I appreciate it. I appreciate it. All feedback is welcome. Trust me. So what keeps me going? All right, let's go to the USDT chart here. Let's understand BNB. Now, I was looking at this range right here, right, when we had first started, and I was actually looking at the weekly, and this is why I was kind of ill as far as where direction goes, right? Because we see price rate liquidity to the downside here takes out this entire range, literally entire range. All of these lows have been taken out. So now that all the longs are out of this trade, right? We see that retracement back up, and then we see price break a high that caused a new low on the weekly time frame with imbalance, right? It left that imbalance, it left the man zones, and this is where I was very ill as far as taking trades within this area, because now that we've broken weekly structure, right, to the upside, obviously we didn't take any wicks or anything right here on the daily structure, but if we're looking at the weekly closures, right, if we can break these highs right here or continue to hold within this area, come down to these range lows, take out these lows here, we could still see that upside continuation, right, from the accumulation that occurred here, the breakout to the upside of the range, and then we will look for the SOS, right? That sign of strength, which is going to be a reaccumulation, a fractal reaccumulation on lower time frames. So we'll see price distribute. This is going to get everybody into those shorts, and then we'll see the lows taken. So we'll take the lows, and then we will see that break of structure to the upside, that distribution to then accumulation. So as far as BNB goes, right, it's for me, it's in a no man's land spot. I don't really want to take any trades on this coin right now. Really, the only cryptos I'm going to be main focusing, right, is going to be Bitcoin and ETH. If we take a look at that ETH short, right, that was presented, that we talked about the other day, and let's just take a look at the one that was posted in chat, right? This was posted right here. Why did I even post this? Why did I say I'm going to short this? Well, same exact scenario. We are in a counter trend scenario at this point, right? But the structure was given to me. My rules were given to me. Everything came up, right? And I'm now able to take this trade. We get a break of structure to the downside right here. Price comes back up, right, to fill that. So let's look on the 15-minute. This is where I was most interested. We see that displacement candle to the downside. We're sponsored. That consolidation before that breakdown. Let's go to the 30-minute. You can look at these areas as well, right? That consolidation before the breakdown. So I look for a supply zone within this area to look to possibly take this trade. Let's go back to the hourly now. So we saw that break of structure to the downside right here. Price came back up into these areas of supply, right? If we go to the 15-minute, we can see that clean drop-based drop, that clean supply within this area that was formed, as well as some buy-side liquidity that was left behind, right? So price trades up into this. What is received after this? We break structure from a low that caused a high. We break structure here. We break structure here. Both of these lows that caused new highs after this structure break occurred. So let's just go ahead and draw out the market structure. Let's make it simple, right? Make it simple. That's all we need to do every single time because we are looking for just our rule of steps. Low, high, low, high, break of structure. Right, so if we see this, and then I draw that higher time frame structure as well. So I have a high, apologies, my mic just died. That was very, very weird. But if we have that high and low that was drawn, right, we can see that low that caused that high. We see that break of structure to the downside. Let's take away the noise real quick. Boom, right? Downtrend put in place. Downtrend put in place. Downtrend confirmed after that mitigation of that supply that caused this new low. Right? It's the same behavior. I can show you all of these charts, right? We can get into all of these charts. We can get into Forex. We can get into crypto. And we can look at all of these different currencies and indices, right? And understand where price is heading to because of our behavior analysis. I don't have to have any type of I believe I would call them limiting factors, right? Within my trade, because now I can just open up a chart with candlesticks and understand what's actually happening within the range. I don't have to have a certain right, indicator cross or anything like that, right, to be able to take my trade. We are just looking for that setup, those 3-4 steps, right, that impulsive move that breaks structure. We're looking for that area of demand or supply that caused that move, and then we are looking to confirm that once it comes into that area. Now, the swinging, right, that swing, that comes from that mindset, that 1, 2, 3 mindset, from the from the higher time frames to the lower time frames. So I'm looking for 1, 2, 3 steps on the daily, 1, 2, 3 steps on the 4-hour, 1, 2, 3 steps on the hourly, 15, 5, 1, 15 second, 5 second, right? Done. And now that I've done all that analysis up until that point, I'm good to hold my trade for a 4-hour or daily take profit, because now my daily to my 1 second is in a line. Every time frame is in a line, so I can now hold for a daily take profit versus entering on the 1 minute or the 1 second and taking profits right away, right? I don't need to do that. We can now hold for that higher time frame, and now this is how we have that ability. And you can see those charts out there, right? Those traders out there making 300, 400%. You're like, how is that possible? Are they literal degen just trading their entire port, right? Just full porting everything, and they're just getting lucky? Maybe, right? I don't know that for a fact, but I know this ability will bring this analysis, this institutional perspective will bring that ability to make those insane numbers and still risk 1%. You're not taking anything off the table, right? All you're doing is just turning the odds into your favor at this point by risking a lot less as far as pip count goes, right? Not as far as margin goes. Because my pip count is less, I now have the ability to place more margin in a trade, right? Which gives me the ability to make more profit a lot quicker, right? Now that I have this ability. So I came up to the 1 second at that point in time, right? And I can drop a 38 lot on GJ, which I obviously wasn't able to. I have a swing account, but I could drop a 30 lot on GJ right there, right, and then risk losing 1,000%, which is $1,000, which is 1%, and be done. I'm completely fine with that. Or I let it run 5 minutes, I'm up 10, right? Stupid. It's literally just turning the odds in your favor. That's it, right? Being patient, waiting for all of our steps to come into place, and then once they are there, enter the trade. If you are stopped out of your trade, the chart will tell you why, right? And that's also the beauty of this analysis. The chart will tell you if I picked a supply zone right here, or I picked this little 15-minute supply zone. Let's just say I picked this candle right here, right, as my supply zone, and I set limits, and I'm stopped out. Why was I stopped out? Well, one, I set limits. What does that mean, right? How can you say, well, you were stopped out just because you set limits? Well, if price comes up into this area, right, we need that introduction of more supply on lower time frames. So where is that going to come from? That's going to come from your liquidity raid. So what does price do? It raids liquidity, right? Still sponsors or still respect the highs that caused the new low, and then continues to the downside. So it introduces more supply on lower time frames within these areas, right? We see the rated liquidity, buy side liquidity, immediate bearish engulfing. That tells us, right, that algorithms are now building up their sell positions versus buy positions, and they are inducing traders into getting into longs, right? All of these lows right here. So everybody who got in a long trade right here thinking that it's going to continue to the upside, where's the most obvious spot that they're going to place their stop loss? Just looking at this, right? Where's the most obvious spot if you were in a long? Right here, right? That's that swing low that caused this high, and we have some type of whatever you want, whatever you have in here, right? Whatever you're looking at. What do you have within here? Nothing, right? We still have that break of structure to the downside. We're still following our structure. Now, if we look at this, they'll place their stop losses underneath these lows. Stop loss under lows, 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 stopped out, right? They're just constantly getting into this trade and holding for these lows right here. And this is where session times and timing becomes very, very important as well, because I don't mention session times a lot, but I do use them a lot for my confluence and for my analysis. Now, what does this mean when you ask? Well, as I'm looking at areas to possibly take trades off of, or any type of setup that is occurring, the reason I look at sessions and look for these certain trades with certain amount of time, or sorry, in certain times, is due to the volatility that is going to be in the market. So I also wanted to talk a little bit about news as well with the CPI. So with news, right, I personally do not trade news. I do not trade any type of macros, right? I don't trade based off of what some CNN person, right, put down on a sheet of paper and said Bitcoin's going to 1,000 or 100,000, right? I'm not trading based off of that. I'm just understanding that the news that is being placed within the economy at that point in time, right, is going to bring volume and volatility into the market, right? So that's when I can go look for those liquidity rates. That's when I can go look for those breaks of structures with impulse, because that's when the most volume is going to be within the market, right? That's why I'm looking at London. That's why I'm looking at New York. And that's why I don't trade a lot of Tokyo, because we don't have a lot of volume and we have a lot of consolidation within Tokyo on most pairs, right? Obviously, JPY pairs are going to see a little bit more love when it comes to that Japan session, that Asian session, right? Sorry. But when we're looking at this and just trying to understand when certain news will drop or how that goes, trying to trade off the news, right? That's just way too much noise for me. I just know that I have a set of rules. I'm looking for that impulse. What brings impulse? Volatility. What brings volatility? News. So you can now start to see, right, where everything starts to come together. We're not just taking any trades based off of one or two instances, I can say. Let's go to that GJ trade real quick, just to show you guys real quick at this point in time. So I took out a lot of analysis within this area. So if I go ahead and bring all that back for you guys just quick, so I can show you guys what I was looking at that point in time. Could have been this group. It was not this group. Everything in here, I actually believe I deleted it. We're not going to go ahead and go through that right now. We'll just understand what happened within this area. So I'm not going to teach you guys ICT or anything like that. He's on YouTube. You can go ahead and look him up. But I was doing a midnight price and 8:30 opening price analysis with this certain trade, as well as that 9:30 volatility. So this trade was actually taken at around 9:45. a.m., which is going to be I'm Eastern, so the New York session time, right? After stocks opened, about 15 minutes later, we saw that move, right? And I was able to get into that trade. So I was looking at midnight price and I was looking at 8:30 price. We're looking for the manipulations of those price points, right? To tell me that whoever was in a trade one way or the other way for the day set their stops, right, at the certain day high or low, or the certain session high or low. Think about those 5 minute only scalp traders, or 1 minute, whatever it is, right, that just trade sessions. And maybe they swing, maybe they don't, but they just trade sessions. And once they are done for that session with that day, if they're in a trade, right, they are placing their stops over the high or the low of that day. Now, this is where it comes into that manipulation, because now you wake up, right? You wake up, you're stopped out of your trade, you go the other way, and then you're stopped out again. Now you're like, what am I even doing, right? That's where that liquidity rate and all that manipulation can come into instance as far as timing goes, because algorithms are going to manipulate time and price, right? Those are two things that we as humans, right, cannot seem to get over based off of our emotions, right? We can't manipulate time ourselves, and we can't manipulate price ourselves, right? But who can? That composite operator, that hedge fund, that big money that can do that. So how can we see that? We'll look at certain times where big money is going to be in. We'll look at certain candles that shows us big money is entering the trade, and then we'll look to confirm that, right? We're just following the whales. We're following those who capitalize off of the uninformed, right? So now we are capitalizing off of the uninformed as well. I'm taking profits at their stop losses, right? That's literally it. That's the definition of exit liquidity right there. Um, but understanding midnight price and opening price, right? This was on the 5 minute chart. Let me go ahead and draw the midnight price that had occurred over here. This was all the 8th. Okay, cool. Back here at the midnight price, the open of that candle. Sorry, I have to draw this out again. I had this all drawn out for you guys before, but I definitely deleted it. It's all good though. But we have our midnight price, and then I'm looking for the 8:30 price as well. Now, why is this important, right? Again, I'm not going to teach ICT, but why is this important to this trade? I was looking for the manipulation the opposite way of where I was looking to take this. Now, I was looking to take this to the downside, so I was looking for price to manipulate to the upside, right? Take out those early buyers. Same exact thing here. So that midnight price that was opened here, and then we'll do that 8:30 price as well. Right here, this opening of this candle right here that had occurred. Again, I'm looking for that liquidation rate, right, to the upside to show me that they're inducing everybody who got in trades right here to set their stop losses at these lows, and everybody who got in trades right here to set their stop losses at these lows, right? All that did was create liquidity. So everyone who was done with their session, that price opened up, right, that midnight price and that 8:30 price, then we saw that move from that. Now, midnight price is going to be for Forex for those who are trading that London session, right? And then 8:30 is going to be more for that New York session. You can refer to that midnight, but that 8:30 will be that most prominent time that you'll look for that manipulation of the most recent, right, price note that had occurred. So 8:30, right, that midnight price, sorry, and then that 8:30, and then when's volatility coming into the market, right, that 9:30 opening, right, as well as 8:30 is when news drops. So we see some volatility as 8:30 hits. So this is all I have to do, right? I wait for that volatility to hit. I come to my desk at 8:30, right? 8:30 hits, boom, trades in play. It's shown to me, right? I didn't do anything all day. I set my alert at this, right? It hit my alert, and then I come to the computer when the volatility is going to be in the market. 8:30 hits, displacement hits to the downside, break a structure to the downside, confirming everything that is coming into play, right? And then I'm in my trade. Hour and a half later, right? I do an hour and 45 minutes of waiting. Not even actually 8:30. So an hour and 15 minutes of waiting for that trade for a 50 to 1. Completely fine. I'm done. I'm out for the week. I'm good with that, right? So we see that break of structure to the downside, that mitigation, and then that continuation. Let's go ahead and mark out 930. 930 hits, move occurs. That volatile move occurs, right? Everything that we are looking for comes into place. So this is where that time in both price can come into action. I show you a lot of price manipulation because we look at a lot of candlesticks, but this is where that time manipulation comes into play because now we know when the volatility is going to be the market, when it is going to be present, and when we can possibly look to take advantage of that, right? I'm not going to be trading at these times where price is not doing anything, right? What is the point, as I was saying before, of sitting down all day staring at the charts? It's doing nothing but bad for you. That's doing nothing but bad for you. I guarantee you that, right? But with that being said, probably going to go ahead and end that or end this stream here today. Again, I appreciate everybody who came out today, got this knowledge, sat down and listened to me literally ramble, yell at you guys, try to get this mindset, right, stuck into your guys' head so you don't get discouraged if you lose, right? You don't get discouraged if you don't understand what's happening because we can get into this mindset to where we do understand what's happening by looking for just our rules, right? I don't necessarily need to understand what's happening overall. I don't care what the yen is doing, right, on the news. It's all noise to me because when, and this is just as a basic general little statement, but when has everybody been right on direction? When has the general population or general public ever been right on the direction of an asset? Never. Go back in history, they have never been right, the general population, on the direction of the asset. And why is that? Well, because as a hedge fund, as a composite operator, right, I am against the general public. I'm against the general liquidity, and I'm going to seek that 24/7. And that's why we see news that could be bullish, right? It sounds like bullish news, but price drops. Price drops, right? Based off of structure, based off of where algorithms and the quote unquote composite operator is going to seek liquidity because that is how markets move. They do not move based off of your lines. They do not move based off of news as far as, and what I mean by that is as far as direction, right? They will move as far as a lot of volatility, but as far as direction, they won't be present, right? News isn't going to say we had bullish news, price go up. Does not work like that, right? And we know that just from literally experiencing it ourselves. I don't need to sit here and tell you guys that, right? So we can understand, right, that everything that we've done up into these points has gotten us this profitability. We understand when we are looking to possibly take trades. I personally look for London, right, and I look for the New York setups coming into play. I believe Tokyo has a lot of consolidation. We end up seeing a rate of either the Tokyo highs or lows, and then we see the move occur after that, right? That's usually what happens. I'm not going to sit there and say 100% of the time that's what happens, but if we are looking for our behavior, right, doesn't matter. We can just look for the same 1, 2, 3 setup, and then we are good to go. So with that being said, I appreciate everybody popping out again. If you have any questions, anything like that, go ahead and DM me or don't DM me. Drop it in chat, however you feel. I appreciate you guys all again, and you guys have a great night.
Oh yeah.
Davey!